What's going on, guys? Welcome back to Team Ivy League Trading. This is Tyler Tulo back at you again with another hot video, another hot piece of knowledge. Today we're going to be going over an extra confluence, which is the relative strength index, or else known as the RSI. So let's go over, check it out on the chart, and I'll show you guys how to use it. Alright guys, so when using the RSI, the relative strength index, most people use the levels 70 and 30. Now I have tuned mine down to using, not the arrow. I've tuned mine down to using the 75 and the 25 because I figured that the 75 and the 25 are more accurate, and I have tested that for like a year or two. And so far, the 75 and 25 have been much more accurate than the 70 and 30. Now, starting off, relative strength index typically shows us in simple terms when something is overbought or oversold. So, for this example, I'm going to use GBP USD, and yes, I actually do have an active trade in right here. But that was from that trend line, and then I also had a break and a retest of this previous major support zone here. But going back into the indicator, so RSI, when it's at 70 or 30, it's typical levels, right? At 70, we are looking for sells. It does not mean it is a sell. And at 30, we are looking for buys, but it does not mean it is a buy. It is showing us that something is simply overbought or oversold, so we can look for a reversal around that area. So that's why we use it as extra confluence or extra confirmation, not as a main thing to trade off of. Now, you can use it to mainly trade off of, and you probably will win most of your trades, but having one confirmation is never the best way to go. So, real quick, right here we can see we have this M formation forming, we have this bullish trend coming up, right? And then we come up, top off, comes back down. So, now if we didn't have anything else, if I was just using the RSI, we can see that the RSI was above 75, right about 77. So right here I would have been looking for sells, and I'm looking at this on the 4-hour time frame because that is a really strong time frame, and it usually means a larger move is coming. Now, just for an example, I'm going to circle this, and let's go down to the 30-minute. So I circle it to remember where we were. Okay, so now 30-minute, we could have also seen that the RSI kept tapping that 75, but it was unable to break it because at this point in time it was overbought. So we know to start looking for signs of reversal. Now also, going back to the 4-hour, if we look again, we do have our typical price action formation of an M. Okay, so M or double top means that we do have two tops relatively the same height, and they tell you to trade M's by selling after it's broken down or after you have confirmation that it is turning around, but I like to sell on the top of the right shoulder and stop loss above the left shoulder, so up about here would be my stop loss. But going back to this trade again, this is also divergence, and this is going with the chart. So if we go into our RSI, we look at it, topped out, did come down, so even if we missed this, we did have another trade opportunity at this double top, and also two after it broke below the 50 RSI. So right here we can see the RSI is about 40, and guys, I'm looking over here for my number just so you guys know. Right here I'm down about 40 RSI, so once it's broken below the 50 level, which I will explain in a second, once it's broken below the 50 level, we can expect it to pull back up because we're in an uptrend, and then we can look for our next selling position, which again is this double top, and then also it retraced back up to about 63 RSI. So in this case right here, the RSI level would not have been valid, but what makes it valid is, see this point here, even though it's about the same height as this one here, we do have a much lower RSI than previous. So if I draw a trend line on my RSI, I don't typically do this, but for example, and to give you guys more in-depth knowledge, this is what I'll show you why. So we have this point on RSI, which is above 75, and this point, which is below 75. So that way we know that the uptrend is getting weaker, right? So this is our first sign of weakness. So once we would have seen the double top, and then also that would have been the support as well, then we could have taken that sell as well, and then down to this previous support here, which I wouldn't have quite hit, but if we go off, let's say the top of these or the bottoms of these here, this is like a minor support in here. I wouldn't call that a major support, but that's about that average price line. So TP1 and then maybe TP2 down here. So this one would have only hit our TP1 or close to it. Now again, up top right here, so see how this RSI is ascending right now? So we wouldn't be able to use that as far as divergence, but we could use it just as straight up RSI. So RSI 75 right here, gets pretty low, did come back down. Then again, that's why we don't use it only. That's why we use an extra confirmation with. So is this has support right here? We can go back and check. Go back and check and see if this is a support. So let's say here, and then drag this all the way back. It's an okay support, but I definitely wouldn't say it's major, and I definitely wouldn't say it's like a primary or super strong, because even all the way back here, December 2019, there's not too many real touches on it. Like right here would be a better support, or even down here, because it's the tops and the bottoms. So resistance up top, support down low. But for this instance, that would not have worked for our support. So again, we do not have enough confirmation, and we are still in our uptrend. Now let's look at here. So we come back down. RSI is topped out over here at 75 again, so that means we know a sell is coming. So we can begin to look for sells. Okay, coming down, and as you can see here, it formed this right shoulder to this head and shoulders formation. So we now have high RSI on a higher time frame, and we also have a head and shoulders formation. So we have shoulder, we have our head, and we have our next shoulder here. So typically, the way normal traders or by the book traders would trade a head and shoulders would be on the break of the neckline, which is about the bottom of this box here. Okay. So the way I teach my students and you guys to trade head and shoulders is to sell on the top of the right shoulder with a stop loss above the high on the left shoulder. So our stop loss would be here. Okay. So this would be our stop loss according to my methods. If you were to trade by the book method, you could trade on the break of the neckline. So here, with your stop loss above the head or a stop loss above the previous high. Now again, we would have multiple trade opportunities here because we would have seen the RSI going below 50. So once it breaks below 50, we have now transferred into the sellers are in control instead of the buyers are in control. So we have a major reversal pattern on our 4-hour time frame, and then we also have a break and retest of the neckline and then a breakdown. And also too, because we're using RSI, we can see that the RSI has gone below the 50 level. So now let me go ahead and get into the 50 level. If you guys would like, you can throw in, I think you can throw an extra level in here as well, or just throw a horizontal line right on the 50. So for this example, I'm going to do just a horizontal line there. So every time the RSI touches the 50 or it breaks and retests the 50 level on the RSI over here, we are looking for a continuation in that pattern, or if it breaks down, so see right here, it broke down below the 50, so it broke down, came up a little bit, tiny bit right there for this candle, but the candle stayed below the 50 RSI. So what we could have done is either entered here or even waited for it to come back up, break down, then come back up and touch that 50 RSI again, which is right here. If we go straight down, it's also right at that 50 RSI. So then again, the RSI didn't quite touch 50 on this one, so we can see that that divergence is also there. So typically divergence is going to be when RSI is going up, but the chart is going down. Okay. So in this case scenario right here, actually I lied to you, I'm sorry, that's not divergence, but the RSI didn't quite hit the 50 and it's at the exact same level it was before. So we have this candle and then this candle here. So we can see the RSI is constantly working its way lower. So the sellers are still in control because it has not broken above the 50. So let's check out current price. What's the RSI been doing? After a large push down, come down, keeps pushing here, and then we have our support here from way back when. We could go back and backtest that as well. But in this scenario, I've already backtested it, but I will go ahead and show you guys. So I got it off the bottoms of these here, okay, and that was enough confluence for me because we are on the higher time frame, which is the 4-hour. So right now, current price action, right? I'm not trading based off the RSI, but I am using it because it is hovering around that 50 level. So I'm predicting that this will continue in a sell because we are in a current downtrend, and then 2, we had a major reversal pattern on that 4-hour time frame. So now I'm going to go over to another chart, you guys, real quick. All right, guys, so this is Euro USD, and I'm giving you guys plenty of sell examples because I'm not seeing, on the pairs that I normally trade, I'm not seeing too much of the 25 taps, but we can see as it got lower and lower. So here, looking at 28, back here we're looking at 31, so it is getting really close to that 25 level, so we are looking for buys there. So if we go straight up, did hit our support multiple times, turn back up, and then also, I wanted to show you guys this as well because this is another case of divergence. So our high on this this push here was 1.19500, and then our next high on this push was 1.19900, and its absolute high was 1.20. But 1.195 to 1.199, we do have this RSI maxing out at 75, and our next push over, we have it at 73. So even that slight case of divergence in the higher time frame can influence a selling decision because one, we do have a huge push up and we have this like huge range that is trading in, right? But 1.20 has been a key level for months. and it hasn't broken above that since, let's go back and check, April 2018, January 2018 was the last time it broke above that. 1.20 is also a whole number, so if you guys haven't gone on my quarter point video, also check that one out. But back to our original markup. Okay, so here again, we do have this high, same thing, and if you would like to draw a trend line on your RSI, you totally can, but again, we do have that divergence, and we also have that trend line on the RSI itself. So it's consistently making its way lower and lower and lower. So in order for Euro USD to sell off based on RSI, I'm looking for it to break below this 50 RSI, like this, come down, and then retest that 50 and then continue its way down. So that way we should see our take profit down here. I'm also in this trade as well. But again, same thing, 75 RSI, 73 RSI. So this high, even though it's higher, has a lower RSI. So that signals divergence, which is also reversal. If you guys have any questions, let me know. Hope you guys enjoyed and have a great day.